Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service firm here in Boulder, Colorado. So this has been a tough year. I'm not going to lie to you. This quarter has not been good. July was positive, but then it gave up what it gained in July, in August, and September. I'm recording this on September 18th, so I'm not quite sure what the last week and a half, 2 weeks of September are going to bring. But it's been a really tough quarter. It's been a very tough year. These things happen sometimes. Up on the screen, you're going to see the multiple year graph, and I have now circled the decline that we have seen this year, where we have given up in the last 9 months or so what we gained in a year and a half. No, we didn't give up the entire stock market. All right, we gave up what we earned in the last year and a half in general with the unmanaged stock market indexes. Sometimes that happens. It stinks absolutely every time. If you look up on the screen, I've done another chart. Those that are on the bottom are the intra-year declines. The numbers on the top, the black numbers, the dark numbers, are what the year ended. You'll see that the last 3 years were positive, even though they had during the year some negatives. This year, it's been negative. It was worse negative, but now it is still negative. 3 out of 4 years, as we go back 30, 40 years, historically have been positive. 1 out of 4 is negative. Every single time it happens, it stinks. It's a right to have some emotion about it. The question, which we'll talk about here in a little bit, is what you do with that emotion. Having the emotion's fine. Doing something with it that is detrimental to your long term is quite another matter. Up on the screen is another chart which shows even bonds this year are negative. I'm putting a little red box around kind of that third column over. I mean, if you had 30-year guaranteed government bonds, you're down almost 30% so far this year. You know that by the time they mature, it will be back, it will recover all of that. But even bonds this year, stocks are down and bonds are down. If you just have your money in the money market, if you have it in your mattress, due to inflation, you're also losing money. And inflation is one of the big drivers, which we're going to talk about here in just a second. On this graph right here up on the screen, on the left-hand side, you're going to see what the stock market does is different, is not necessarily correlate directly with what the economy is doing. However, they definitely walk hand in hand, even if it's not perfectly. You're going to see there on the left-hand side that expansions in the economy average 47 months. 47 months. That's about 4 years. And recessions are about 14 months on average. So that's about a year. Okay. So, getting back to that whole discussion I had, just a few minutes ago, 3 out of 4 are positive. 1 out of 4 is negative. Those are odds that I'm willing to go, to invest in going forward. The future is always uncertain. However, we're going back decades and decades in a diversified portfolio, especially of unmanaged stock market indexes. I said I was going to talk about inflation. Look at that chart right there. I have now circled what has happened in the last year and a half. Inflation is the big driver from my point of view. Now, why do we have some inflation? This is a tricky one. We've got a supply problem and we've got a monetary problem. Now, step back for just a second. When people talk about fiscal policy, that's what the U.S. government does. Monetary policy is what the Fed does. The supply is the global, whether you're able to get your circuit boards or, various materials that people want. If we just had a supply problem, then, if there was a finite, if there were 10 widgets, 10 things, and a lot of people wanted those 10 things, they would bid the price up. It was very important to complete your car or your particular manufactured goods. However, in this case, we've thrown in some gas onto the fire here. We have flooded through fiscal policy, even if it was well-intentioned, we have flooded the market with lots of cash. At the same time, we have restricted supply, which is a problem, which then causes the Fed to want to take money out of the market. And they do that by raising the interest rate. So you've got all these competing forces. It's going to take a little while for it to settle down. This has been a huge shock to the system over the last couple of years. This is pretty unique. It's not pleasant. In my opinion, there were some things that we could have done differently. Maybe that's in hindsight. Give the benefit of the doubt, but there have been some missteps here, and now we are correcting that. When we look back at various crises in the past and various declines, there's usually some reason. It seems only so obvious after the fact. Whether it's the tech bubble, whether or not it's a housing crisis, which I would argue was really a cash and a credit crunch back there in 2008. Right now, we have a money supply issue and a supply issue, global supply, mess, getting materials to the proper manufacturers. Having, unpleasant emotions around it is normal. We are human beings, for goodness sakes. The question is, do you do something short-term when you really have long-term plans? The answer should be no. We have long-term plans, and so we can't let short-term data dictate those long-term plans. It's interesting that if the market went sharply down but came back relatively quickly, that's that's like ripping the Band-Aid off very quickly. Boom. However, this is a ripping off of the Band-Aid very slowly. It is being dragged out, over months, over some quarters. All I can really say is that 100% of the time, going back 100 years, it has recovered if you are in a diversified portfolio. I expect this to be the same. So I'm not worried, except to the degree that I want it back as quickly as possible. I mean, let's not kid each other. That's more fun. But it is down. Everything is down. Pretty much everything is down, both in the U.S. and internationally. Stocks, bonds. We've got to figure out this mess. The best thing for us to do is always keep our eye on that long term and stay cool as cucumbers. Mike Brady, 303-747-6455. Have a great day. Let's hope that this next quarter is a good quarter, that we end up the year a little bit better than we are right now. Have a great day. Bye-bye.